Hi everyone, hope you're all doing good. So this is Trading Coach this side, and in today's video we are going to discuss about one of the simple price action trading strategies. This is a very simple price action based approach, and this is good for short term trading. And the strategy which we are going to discuss in this particular video, this will give us an excellent risk adjusted returns in the market. All right. So the name of this particular strategy, we will call it as stall, trap and move. So the name is a little different over here in case if you are a little curious. So this particular strategy is based on the market traps. All right, it's a market trapping strategy. All right. So being said that, before we get into the topic, as usual, I recommend you to hit on the subscribe button, tap on the notification icon, so that you can receive more insightful contents just like this. And apart from that, if you like to know more about me, more about my trading style, I recommend you to visit my website, that is www.tradingcoach.co.in. So let us start our approach just by looking at this particular chart. So what I have here is Bharat Forge Limited, and this is a 5-hour time frame. So if you look at the price action on this particular chart, you can see the price action on the right side exactly over here. So here we can see a kind of a stall, trap and move. All right. So in case if you are a little curious, I'll just explain what actually happening here. So let me just start by focusing on this particular price action. Let us see this actual sell-off over here, right? So we can see a nice fall in the stock prices, right? So the stock prices fell all the way from 780 to all the way till somewhere around 700. And right after this sell-off, the prices quickly stalled here, right? The market quickly, took a break. So first there was a sell-off, and right after that there is a kind of a stall in the price action. So here what happened is, right after the prices quickly stalled, we had a series of buying pressure. We have a series of bullish candles over here. So if you think about the price action over here, if you try to understand what's actually happening behind the scenes, so all these guys are actually early buyers. So the people who thought, okay, the sell-off is already done, the people who are trying to bottom pick this particular stock, they were actually trying to capture the market here. They were trying to enter into the market right after the sell-off. So this particular movement that we see here is actually driven by early buyers. And right after this specific rally, what happened next was there was a kind of another sell-off. So the people who actually sold at this particular sell-off, they were actually late sellers. So after a rally, the people who are still bearish on the market, people who are thinking, all right, the prices are going to go down, these guys ended up taking a late short selling position right at this particular point. And these late sellers are responsible for this kind of a sell-off here. So right after the early buyers and the late sellers, we can see what happened on the price, right? The market trapped both of them. So the market first trapped the early buyers, then it trapped the late sellers, and after that the market continued to move even to the downside, right? So in this case, both the people who have entered early in the market and the people who have entered late in the market, both of them got trapped by the price action. So this particular pattern which we can see here, this is what we call as stall, trap and move. All right. So typically what happens is, prices will first stall and then it will create a trap and then it will pick up the momentum. So in the sense, this is a kind of a market trapping strategy. So what we are supposed to do is, as a trader, when we are seeing this kind of specific pattern, we are supposed to wait till the trap. All right. Don't be an early buyer or don't be a late seller. Wait for the trap and then take your position. So in this particular case, when I saw this specific trap over here, right after the trap, I could have went for a short position. all right. So right after this trap, we can see a nice bearish candle over here, right? So this bearish candle is a confirmation for us to take our short trade, all right. So here is the key point you need to keep in mind. Don't be early in the market or don't be late. Wait for a specific trap and then take the trade. All right, it's a kind of a rhyming here, but it does make sense for us to keep in mind. That's how a prudent trader usually trades the market. Keep in mind. All right, so we have seen a bearish example of that stall, trap and move trading setup. Now let us look at some bullish examples. So for this, I'm actually looking at Euro INR currency chart and I'm looking at 1 day time frame. So first you can see a nice sell-off over here, right? We had a nice downfall. Let us just mark it out. And right after that particular sell-off, we can see a nice stall over here, right? We can see a series of late buyers. We can see a series of early buyers, right? The people who are pretty early in the markets, they are actually trying to bottom pick this particular sell-off, right? They are trying to buy the currency after this sell-off. So right after this early buyers, now once again when the market just went up and gave a kind of a small reversal, we have a set of late sellers, right? The people who are pretty late in the market, they have taken short position, and because of that you can see the prices continue to tumble, right? I have zoomed in the chart a little bit so that you can clearly see what's happening here. So right after the late sellers, we had a nice trap over here, right? The prices quickly trapped the sellers as well, and right after the trap the market quickly went up. You can clearly see the trap and the movement, right? So the people who have sold this particular currency over here and also the guys who have actually bought this particular currency over here, both are actually trapped in the market. Right after the trap the prices continue to go up, right? So what you can do is, once we spot this particular trap, once we spot the early buyers, once we spot the late sellers, right after that we can go ahead and take our long position, all right? When you see the trap, you can go ahead and take your position in the market. Again, this works very well when we think about short-term trading, all right? So now let us look at a similar example, but this time I'm gonna show this particular example on the commodity prices. So if you look at this particular chart over here, I'm looking at the 4-hour chart of gold, right? 4-hour gold prices. So if you look at the price action over here, this is a kind of a historical data. So we want to see how the price action actually worked out here. So first we can see a nice rally over here, right? We have a nice upside rally. We can clearly notice that. So let me mark it out. And right after this particular rally, quickly we had a series of bearish candles. And if you look at these bearish candles, all these bearish candles are actually an indication of early sellers, right? The people who are pretty early in the market, the sellers who have taken positions pretty early in the trade, they have taken their positions in this particular zone, all right, in this particular area. And right after these early sellers, we also had a series of late buyers, right? We can see a set of late buyers over here. So after these late buyers, as usual, the market quickly trapped both of them. So first there was early sellers who got trapped, then there was late buyers who got trapped. Right after those traps, the market quickly moved against both of them, right? The prices quickly picked up the momentum on the downside, and right at that particular point the market fell like anything. We can clearly see this. So in this particular case, right after this particular trap, we can see a sharp bearish candle over here, right? So that bearish candle can give me a nice entry to capture the downside momentum, all right? So as we have seen this example on 3 different segments, we have seen this on stock, we have seen this on currency, and now we have seen this on commodity as well. This particular strategy can be applied on any different market segments, and we can also apply this particular trading strategy on any different time frames, all the way from 5 minutes to all the way till 1 day chart. So being said that, if you have any doubts or any questions on this particular strategy, I recommend you to leave your doubts and questions in the comment box below. And if you like this particular video, please click on the like button. It will be a very good motivation for me to create more videos just like these. And thanks a lot for watching. Happy trading.